Okay, this is chapter 10, the last chapter we have for the review, and this is on depreciation. So here we have the first one is double declining balance. And first I'm going to show you how to calculate the percentage. Okay, looking at this one, that it has a useful life of 5 years, which means we're going to separate the amount to depreciate in 5 equal increments. And if you do that, you're doing 20% each year. So this is year 1, 2, 3, 4, 5. Okay, you're doing 20 the first year, 20 the second, 20 the third, 20 the fourth, and 20 the fifth. 20, 40, 60, 80, 100. That's 100%. If you were doing this for 10 years, you would be depreciating 10% each year. Okay, the reason why I'm showing you this is because this is how you calculate the double declining balance. Double declining balance means double the straight line rate. So if the straight line rate is 20%, double declining balance for this one is going to be 40%. Okay, with that being said, let's calculate the first year. Okay. With double declining balance, you don't take into consideration the salvage value until the very end. Then you just want to make sure you don't depreciate it past the salvage value. So we're not going to look at the $15,400 yet. Here we're going to take, this is year 1. Here we're going to take the full $16,000 and we're going to multiply it by 40%. Okay, we will depreciate the first year by $46,400. And notice that it says that they purchased it on October 1st. So we have October, November, and December left. We are not doing a full year's depreciation in year 1 because they only had the asset for 3 months. This $46,400 is the amount that you would have for the full year. We're only going to depreciate 3 months worth, so we then have to multiply this by 3 over 12. 3 months out of the 12. Which means our depreciation is actually $11,600. Okay, let's see how much we have left to depreciate. Okay, we had the $116,000 and we just depreciated it $11,600. So we have $104,400 left. This is the number that we use in year 2. You will take the amount of the asset minus what you depreciated it, and it's $104,400. Does anyone know what this is called? Think about it. This is the book value. It's the amount of the asset minus accumulated depreciation. Okay, year 2. Year 2, we will take the $104,400 and multiply by 40%. That's $41,760. This is the amount of depreciation for year 2. Because it's a full year depreciation, we're not multiplying it by anything. Okay, let's take the 104 that we started with, subtract the amount that we just calculated for depreciation, and we get $62,640. This is the book value. And the question here says, what is the asset's book value on December 31st, year 2. This is at the end of year 2. This is the book value. So this is your answer. Okay, now let's look at, next one is straight line depreciation. Straight line is one of the easier ones because each year is the same. Here we have an asset for $29,000 and the salvage value of $3,400. The useful life is 4 years. What is accumulated depreciation on December 31st, year 3? Okay, so let's calculate how much we're going to depreciate this asset each year. Okay, let's look at year 1. Okay, the calculation to get how much you depreciate it is going to be the cost of the asset minus the salvage value divided by the useful life. What useful life? The cost of the asset is $29,000. The salvage value is $3,400. And then we divide it by 4 years. So we are going to depreciate at $6,400 each year as a full year. If you notice, it was purchased on April 1st. So this first year is not going to have the full depreciation. We only are going to depreciate it from April to December, which is 9 months. So multiply this full year depreciation by 9/12. Just like we did up here in the previous problem, we did 3/12 because it was October. We will actually only depreciate this asset $4,800 on the first year because we only had it for 9 months. And 9/12 also is 0.75. So that might make it easier. Okay. Year 2, it is going to be depreciated the full $6,400. And year 3, the same thing. Year 1, we only depreciated it for 9 months, which is $4,800. Years 2 and years 3, we depreciated it the full amount for both years. That's a total of $17,600. This is the amount that is in accumulated depreciation right now. And I'll show you the T account for that. Okay, here is accumulated depreciation. Okay, accumulated depreciation has a normal credit balance because it is a contra asset account. The first year, we depreciated at $4,800. And then the offset account, we would do a debit to depreciation expense. Okay, then we have a credit of $6,400 for year 2 and year 3. Whoops, 17,600. Okay, so the answer is $17,650. Okay, 24. We are almost done. 24 is asking for the total asset turnover. The formula for that is net sales. Net sales over average total assets. Tells you that net sales is $995,000 and your average total assets is $902,000. The gross sales, we actually did not need to know. They're going to give you more information because they want you to be able to pick out what it is that you need. 1.10. That is the total asset turnover. Okay, 25 is talking about the portion of the cost that's allocated to the cost of the land and what is going to be allocated to the cost of the new building. Okay, so the company purchased property for a building site, and then here are all of the costs that were associated with it. And we want to know what portion of these costs should be allocated to the cost of the land and what should be allocated to the cost of the building. Actually, it's not both. It's just okay, 178. The purchase price is 178. Okay, so we took care of that. The real estate commission, is going to be part of that. So we're going to add the 15,300. Legal fees are also added. The expenses of clearing the land. And the expenses to remove the old building. Okay, so now they're all taken care of. This is all going to be added up together. Anything that's used to get the asset ready to be used is going to be added to the cost. So let's take 178,000 plus 15. And we get 198,000. The full amount is going to be added to the cost. All of these things are used to get the asset, which is the property for the building site, ready to use. It's similar to the depreciation, to the cost of an asset of an equipment. Any training that's needed to be able to learn how to use it, anything like that is also added. Anything to be able to use the asset is going to be added to the asset cost. Whoops, a little bit too far. Okay, this next one is units of production, which is also called depletion. The units of production is another depreciation method where you don't look at the useful life. Instead, you look at how many units it produced, how many miles it has been driven, or something like that. Okay, here we have a piece of equipment that they purchased for $350,170. We don't need to know the useful life because we are dealing with units of production. The residual life is 19,500. And it's estimated that the machine will be able to produce 769,000 units over the useful life. Okay, another name for the units of production is depletion. That is another name for it. Okay. We will take the cost of the asset and we will subtract the salvage value, or the salvage value, residual value. That's the same thing, just a different word for it, and divide it by how many units they think it's going to be useful. This is the exact same formula for straight line depreciation, but instead of the useful life on the bottom, it's how many units it's going to be able to produce. And we get 43 cents per unit of depreciation. Per unit. For every unit that they produce, we're going to depreciate this asset 43 cents. Now, this is only part one. Part two, to calculate how much you're going to depreciate, is you look at how much did they use. Here it says the first year, 114,500 bolts were produced. Okay, so we're going to take that 114,500 units and multiply it by how many cents per unit. And we get 50,995. That is what we're going to depreciate the first year. What is the amount of depreciation expenses second year? Actually, we didn't even need to know that because that was year one. So the question is actually asking, what is the amount of depreciation to be recorded the second year? Okay, so we're going to take the second year of 118.5. And actually, this is the answer for 118.5. Sorry. It is early in the morning. I got up to do this before everyone else got up, because then it's going to be too noisy. Okay, here's 50,995. There we go. So never mind this part. I haven't had enough coffee. Okay. Now we're on the last problem. Now this last problem still is on the same chapter. We're looking at selling a piece of an asset. Okay, so the company's book value is $19,800 at the end of the year on year 5. Okay, the asset depreciates $4,800 using straight line each year. Okay, the asset is sold for $16,800. Okay, let's look at the accounts here. Okay, it says that it depreciates $4,800 per year for 5 years. So let's see how much that is. 4,800 times 5 is 24,000. This is the cost of the asset. Okay. I'm going to set up the journal entry because it's asking record the entry to record the sale. Okay, so I'm going to put the accounts in here and then explain where the numbers come from. Okay, so far, not the cost of the asset, I'm sorry, this is how much has been depreciated so far. Okay, the amount that has been depreciated so far was $24,000 because they told us it's year 5 and they depreciate $48,000 per year. So sitting in accumulated depreciation is 5 years of depreciation. So that is going to be $24,000. They sold the item for $16,800. The book value is $19,800. they sold it for $16,800. So we have a loss here of $3,000. Add those up, that means the asset account must be at $43,800, which is the amount that we purchased it for. And this is the last part. There are 27 questions here on the review, and I think the test has like 30. Some of these questions I combined together combine some of the questions together. Like one question might be, what is the interest that you earn on a loan, and what is due at maturity? Here I combine them in two, but it's actually two separate ones. So you'll have roughly about 30 questions on the midterm. And this is the review I made at the same time. It's similar to the test. If you have any questions, please don't hesitate to contact me at all, and have a great time studying, and good luck.